Warren Buffett is hanging on to $130 billion in cash and is refusing to buy stocks and bonds and investments with it. What does he know that we don't? We're going to examine that question, but then also we're going to talk about what he's saying about it and how we can use those same strategies to protect ourselves from what is coming. Hey everyone, welcome back to the Poplar Report. I'm Steve Poplar, and I am an accountant by trade, and we talk on this channel about what the mainstream media is either too lazy or too corrupt to talk about. If you enjoy this video, please do hit that thumbs up to help this get out to more people. Now, Warren Buffett and his investment company, Berkshire Hathaway, is sitting on $130 billion worth of cash. Now, that may be saying something, but the fact is that Warren Buffett over the years has consistently come out and said basically cash is trash. Basically, he is loath to build up cash reserves. He doesn't like having cash. He wants to keep all of his money invested as much as possible. So now that we're seeing him do something very different, I think we should all be paying attention and asking the question, what does he know and what is he thinking is coming? He says this. Speaking of the investments that Berkshire Hathaway holds, the majority of our businesses will report lower earnings this year than last year. Now that is basically the definition of a recession. When you have 2 quarters of things declining, businesses earning less money than the prior year, that's a recession. And that's where we are right now, where he is seeing that clearly in the cards. The Federal Reserve is admitting that they're seeing it now, even though they've denied it all the way up to this point. But now they seem to have a scapegoat that they're going to use, which is the banking crisis. It's the bank's fault, not the Federal Reserve hiking interest rates. It's not the federal government spending money like there's no tomorrow. It is the banks. They were irresponsible. Just like they hung the 2008 crash around the bankers' necks. They're the bad guys, not the government people, not the people that made all these things happen, but those guys over there. So what is he seeing? He's seeing that the market is overvalued. He's seeing that when he's looking at stocks to buy, they just cost too much money. They're not worth that much money. They're going to earn less money this coming year, but then in coming years, they're going to earn less than what people are pricing in them to be. People think that things are going to be good forever, and that's just not how history works out, especially with what we're seeing going on. Also, he's seeing a lot of people are over-leveraged, which means basically when you have $100 and you're buying $300 worth of stock, $500 worth of stock, or options, or you're over leveraged. So basically, if the stock that you're invested in or the investment you're invested in drops 10%, you might lose 50% of your money. And that really makes it so that loans start getting called in and banks start demanding that they sell everything. And people are forced to sell when it's not in their advantage to sell. So there's a lot of people in the market right now who are over leveraged. They have a lot of loans out that could be called in very quickly. So if you have a margin call that happens, if you're using leverage and basically the bank picks up the phone and says, you either start selling your stock right now or we're going to start selling it for you. And when your stock is down because the market's crashing, that's not when you want to sell. You want to like hold on to it and hopefully it bounces back. But they're going to force you to sell just in time for it to start going back up again. And that's going to cause a lot of pain, a lot of losses across the board where people are going to have to start selling. And when people start selling, price of things start going down. When there's more sellers than buyers in the market, prices go down. That's what Warren Buffett is seeing. He's seeing that fear and panic is starting to form in the markets. People are freaking out about what's happening with these banks because they're asking the question, what's the next bank that's going to go down? And people are not wanting to be invested in banks right now. And they're starting to ask the question, could this spread to companies that are not banks? Are there similar issues out there with real estate investment trusts? Are there other ETFs, other investment products that are just as prone to the interest rate hikes and we're not seeing that under the surface? And the answer is there's a lot of corporations out there that are kept afloat only by loans. They are basically borrowing money in order to continue their operations. They owe so much money that they can't function without those loans. And when those loans continue to go up in price because interest rates are being hiked, they are prone to collapse just like those banks. So they're sitting on $130 billion of dry powder, as they call it. They're ready to invest that. As he says they're now waiting to profit from, quote, other people doing dumb things. He's waiting for valuations to come down. He's waiting for the prices to come down so he can buy in. Now, just last year, they sold the Taiwan Semiconductor Manufacturing Corporation, something like that, over in Taiwan. They had a whole bunch of money invested in that, and they said, we don't like the location. That's the quote from Warren Buffett was, I don't like its location. Being in Taiwan, right across the strait from China, which is threatening more and more to invade or blockade or bring economic sanctions against Taiwan, that's serious. So what's been happening this year so far with Warren Buffett's portfolio? He has sold $10 billion in the first quarter. Net pulling out of stocks $10 billion. And then in April, just April by itself, 1 month, they sold another $4 billion. They're speeding up their sales. They're slowly but more rapidly every month getting out of the stocks that they're invested in. So what can we do? Warren Buffett is pretty clear in exactly what he's doing. He's pulling out of overpriced stocks. He's going to wait until the prices come down, and then he's going to buy back in. But here's the question. That's the assumption that things are going to bounce back again. That stocks are going to come down in price, but then they'll eventually go back up in price. What happens instead of a recovery? What if we have a collapse instead, where the stocks start going down, but then they just keep on going down? Now, we have to peg stocks to the dollar, right? So we have to, when we adjust for inflation, the question is, will stocks keep going down? Because like in Venezuela, their stock market just went up like ridiculously high up. It was great, except for the fact that their currency was losing so much value that if you had money in stocks, you were actually losing against dollars. You were losing against other currencies. Your real purchasing power was declining, even though the stock market was going up by 10 times to 20 times up. So it looks like you did really, really well in the stock market, but you really didn't. So the question is and I don't think Warren Buffett's really asking that question enough, which is, could this whole thing just keep going down? Could a collapse really happen? And if you're concerned about that, if you're concerned about stocks continuing to go down for a while or forever, you might want to talk to our friends over at Genesis Gold. If you have retirement funds that you want to put in something secure, you want to move it out of stocks and bonds into gold, silver, platinum, coins, physical assets that, yeah, they do have to sit in a bank account because they're still a retirement fund. For tax purposes, you can't pull it out. Talk to Jonathan and his team down in the description down below. All right, folks, if you found this video to be useful, helpful, you might want to make sure you hit that like button, but then also there's another video right here. I'll see you over there, or I'll see you guys later. Steve Poplar of the Poplar Report out. Thanks so much for watching.